Hello everyone, greetings from SimCity Finance Forum. With us today we have Mr. Satish Gundewar, CFO of CSB Bank. Sir is industry expert, having a experience of more than 30 years in the banking and financial sector. Sir is a chartered accountant and a company secretary and has worked for esteemed organizations such as Yes Bank, DCB Bank, SBI Capital, and Standard Chartered. He's using his expertise of finance and strategy for reshaping the financial strategies. And we are quite lucky to have him here join us the conversation with us. This is going to be a great learning opportunity for finance students and professionals alike. So, sir, let's get started. My first question to you is: tell us something about your journey from finance student to CFO of a bank. How did it all play out?
So my overall career will finish almost 30 years now. I qualified in May 95. In May 95, I'll be completing 30 years of my journey. Largely, my journey has been in banking and financial services space. Started with something like a campus placement to SBI Capital Markets, where I did roles in core finance, as well as I handled treasury, front office, mid office, back office. From there, moved to Standard Chartered Bank, worked into multiple roles, including finance, risk management, been a CFO of a country as well. During part of my career, I was CFO of Standard Chartered Bank in Nepal. Then from there, moved to Yes Bank, gained further experience there, and then became a DCB Bank CFO, and now CFO of CSB Bank. So it's been a pretty long journey. Changed jobs to understand and improve my skill sets, learn more and more areas, and here I am.
Okay, interesting. So you have worked at so many different banks. What are some of the key financial principles which have remained constant throughout your career?
So if I look back, what has really worked for me is that wherever I have changed jobs, one that I have not been very frequent in terms of changing jobs, and the way I used to look at my career, and even today I look at my career, is that whenever there is an opportunity, whether that opportunity one improves or increases my canvas of learning multiple different areas which I have not learned, and if that opportunity provided me that kind of a larger canvas, I picked up that opportunity, irrespective of whether that is financially remunerated to me or not. And I picked up those opportunities, increased my skill sets, learned those skills. And probably that is how I shaped my career. The definition today about growth is in terms of if somebody gets a more salary, he thinks that that is a growth. To me, the growth is where you are able to learn more things. If that opportunity offers you areas which you give an opportunity to learn, then probably that is a growth for me. And that has been my constant principle across whatever roles that I have changed. And probably that has worked for me. And even today, I feel that I'm still a learner. I don't think that I know everything just because you're a CFO. I don't consider myself to be knowing everything. I believe in collective knowledge about the team. And I like people or team members who are there who can actually challenge me. I do not want a team which is just a yes manship to say that, okay, if I'm saying yes, then everybody say. I want people who can challenge me. And that is how I feel that as a team also, they really develop. And that also gives me a much more energy. So I like working with young professionals where new ideas can come and they can really challenge the thought process. And that's how I have been working in this organization.
Okay. So you have worked for around 30 years in the industry. How does the role of CFO evolve throughout these years?
So one is in terms of over the last 30 years has been a really transformative journey, one for the entire corporate India. At the same time, in terms of what are the current expectations from a CFO role, whether it is in a banking or financial institution or any other company, has gone a very major transformative change. In the early part of the career or in the 90s or early 2000s, CFO role was largely confined to financial reporting, saying that accounts and finance. In fact, the word finance itself evolved over a period of time. Earlier, it was an accounts department, and where the name itself suggests that you are responsible for making the accounts of the entity, present it to the board or to the investors, and that's it. Now, if you look at today how any CFO operates, just to give an example of what is the structure of my team, and that probably will give an idea in terms of what are the expectations from a CFO role today. Today, I have 5 verticals which work under me, and there's one more vertical which I directly handle. The first important aspect is internal financial controller. So, financial controller is a very important role which is responsible for preparation of a monthly financial statements, quarterly financial statements, the annual report, the regulatory reporting, which is a very important aspect, especially for banking, timely as well as accuracy of financial regulatory reporting, balance sheet substantiation in terms of to give confidence to the management and the board that the balance sheet is robust and we know everything, all aspects of that balance sheet. So that is a very, I would say, a little more technical role where you should know the rules, you should know what are the regulations applicable, what are the disclosure norms. So it's a very technical role, very important role from a CFO vertical perspective. The next vertical which works currently under CFO is the business finance vertical. Some people call it financial planning and analysis also. This vertical today, to my mind, is the most important vertical which everybody looks forward to from a CFO, is to give a much more granular, deep insight in terms of the business to the management, to the board, to the business heads. It is largely, the way I look at it, that vertical is in terms of we partner with the businesses, one, to measure their performance through various different financial parameters which are applicable to various products. So it is not one, there are, as a bank, there are 20, 25 or much more products are offered by a bank. The metrics with which every product is to be measured is different, and it requires an expertise where we really work with the businesses very closely to show them the real face of how they are performing. Are they generating returns which are more capital efficient? What is their cost efficiency? What is their productivity? What is their disbursements? What are the various types of return ratios that they are generating? So this vertical, I would say business partnering vertical, the scope of this vertical is increasing by the day, and boards as well as managements are looking forward to as to how CFO can add real value to the business, where business and finance can work together to make it happen. For a bit of time, I have focused my energy, attention, my learning in this vertical. So there is this vertical works under me. The third vertical comes is OPEX management. Increasingly, it is very important that not only that we do grow the balance sheet, but also to do a very profitable business. And if everything goes well, and if the OPEX management is not done very well, then all the good work can really go down the drain. So it is very important to see OPEX from a perspective of what are the various drivers to the OPEX, how can we do more cost optimization rather than cost control, how can I generate more returns for the OPEX that I generate, what is the return that we are generating from the technology investments, what is the return that I am generating by opening more branches, by improving the headcount. Headcount is continuously improving for all the organizations. How can I improve the productivity of that headcount? How can I get the best outcomes from the vendors that I am having? So this vertical basically is also works very closely with the financial planning analysis. At the same time, it plays an important role to see that our ratios are good, our cost income ratio is maintained, and we get a much better productivity from the entire business. The fourth vertical is direct tax and indirect tax. Little complex vertical. As a CFO, we should clearly understand. One is the compliance aspect of tax, where today there are multiple compliances for GST as well as income tax, various types of returns, filings, attending to those hearings, assessments, appeals, and everything. That is the routine part of it. More importantly, today this vertical is evolving towards becoming more of an advisor to the business to structure various transactions to see that how can one minimize the tax risk of those transactions? At the same time, how can we structure the transactions in an appropriate manner where not only tax risks are minimized, at the same time we can maximize the returns. And at the same, we cannot go wrong at any point in time for any of the regulatory things, whether it is the RBI or for tax matters. So it is very important that this function is managed pretty well, and it can add a significant value to the business also if they become more of an advisors to the business rather than only the compliance people to just manage. The fifth vertical, which currently works under me, I call it as a finance, process governance, and finance transformation. Uh, Process governance in terms of we follow multiple policies, we draft various policies which are applicable to the finance function to ensure that those policies reflect the true regulatory requirements what are there, plus also to say that how are we doing various things. So there is something called a documentation, we call it as an SOP, some people call it as a DOI, to maintain all those documentation for finance. And finance transformation is that it's an interface between finance and the technology vertical to see that how various processes can be more automated, how more and more newer technologies can be brought. Today, the way I look at finance is that my team should be spending the first few days in terms of churning out numbers, whether it is a bank level numbers or business wise or product wise or vertical wise profitability. And the rest of the time, I expect my teams to be engaging with business actively to understand how the business is done, how the product behaves, engage with the business, help them support, and provide them support. To that effect, it is very essential that we automate our processes as much as possible. So, most of the time, the finance resources spend a lot of their time on Excels in terms of drawing out those numbers and then going and discussing with the business. What's the point in we coming out with numbers post the close of the month by 25th of the next month and then showing to the business that this is how we performed last month? By that time, the business has really moved ahead, the next month has gone, and then there is no point in having that kind of conversation. I feel that by 7th or 8th, we should be done with all these numbers. And if I have to achieve that, the amount of automation that is required is humongous. And my journey in this bank is to ensure that the team is equipped with the respect necessary technology, they have access to the system, so they are able to give a very effective analysis of the numbers to the business. It is important today to not only show the business what, but why it has happened and give them that commentary about the performance is what you add value to the business. What everybody knows that this number has gone up by this or down by this percentage, that is just the what of the numbers. Why it has happened is more important, and I want my team to focus more on the why aspect of that number. So, to that effect, this finance transformation vertical plays an important role. The next vertical which comes under CFO is investor relations. I handle that directly myself. We are a listed bank. We interact, we have investors who have invested money in our bank. We continuously engage with analysts as well as investors to give them a very transparent view about the finance, and not only about finance, about the bank, and provide them a comfort, give them a futuristic view, give them a step by step journey as to what we are trying to do. And that confidence building is very important with the investors. Bank as an entity is such an entity where you will continuously keep on requiring capital as you grow. There is a requirement of a capital adequacy. So if you are growing beyond a particular number, your capital will be needs to be adequate based on the regulatory requirement. Plus, every bank will want to keep some kind of a buffer. So every 3-4 years, the banks need to go to the investors and raise capital. We can't be going to the investors at the time when we require money, but we should build that confidence with the investors all the time. So every quarter we engage with investors, post our results. We have an analyst call where almost 200 people participate in that, and myself as well as the MD and CEO goes and meets analysts as well as investors to give them a perspective about our bank, and what is our journey and the way forward. So I would say that this is like gives a 360-degree view of how the CFO role has evolved over a period of time, and what is true for the bank may be true for most of the entities.
Understood, sir. So, in past, the one of the biggest differentiating factor between the banks is what kind of service they are providing on, let's say, physical branch level. Now, a lot of banks are going towards digitalization. So, do you think this differentiating factor is going to diminish in the future, and the commoditization of the banks might take place?
So if you look at multiple different banks, whatever are the products that are offered, especially from the consumer banking side, the retail banking side, from the corporate banking and SME, of course, the product differentiations are there. But from the retail banking side, most of the products are the same. From the deposit products, we'll be offering savings account, current account, recurring deposit, term deposits. Uh, from the asset side, we will have mortgage loans, vehicle loans, auto loans. So that way, if you see, commoditization of the industry is already there. In terms of the digital journey, today it is, I would say that it's a mix of a physical and a digital world. If we assume that tomorrow there will be no branches in the bank and we can become a completely digital bank and all that, I feel that that may not be true. Every bank, look at any large bank also, they are also increasing their physical presence across the market. They are increasing the branch network. They are spreading the branch network wide across India. At the same time, we have the convenience of digital where almost every transaction can be done via mobile banking, internet banking. There are chatbots which are there, which can actually do transactions, provide response to the customers. But above all, what really differentiates one bank from the other is the customer service. And customer service can be enabled more with the digital tools. At the same time, that relationship management, customer service, touch with the customer, providing him a 360-degree experience of the banking, meeting all his needs, financial needs. That is what actually differentiates even today good banks from bad banks. So I wouldn't say good or bad, but the long-term growth of any bank is purely based on what is the customer service he provides. Because otherwise, the products and all everything will be the same for most of the banks. A customer will remain with a particular bank and give more and more business. Cross-sell opportunities can be explored by the bank purely based on customer service, and that has not changed over a period of time.
Got it, sir. And recently, RBI has cut the repo rate to 6.5. So, how do you think that will play out in the banking sector in the long run?
So, if you see the last 12 to 15 months or maybe 2 years, we have seen a lot of liquidity issues in the banking sector. There have been a struggle for most of the banks to garner deposits, especially the current account and savings account ratio, CASA ratio for most of the banks, including large banks, small banks. We have seen a dip in that ratio. So liquidity has been a major concern in the banking sector. Interest rates were also elevated. What is happening today is that probably what we're expecting is that the rate cycle is turning and it is going to become soft. Whether that journey is going to be smooth or it's going to take some time, that is only time will tell us. But over the last 2 to 3 months, what we have seen is that significant measures have been taken by the regulator to improve the liquidity situation in the banking sector. The banking sector expects that the rate cut cycle will continue. Most of the banks are expecting another rate cut in April. Temporarily, what happens is that when a rate cut happens, most of the retail loans are linked to EBLR, that is the external benchmark linked lending rate. And if the repo rate goes down, then the pricing of those loans also is linked to that, that it also goes down. Whereas the liabilities that has been contracted over a period of time, the cost of those liabilities remain elevated. So if the repo rate cut happens, then in the short term, the margins of the bank take an impact. But over a period of long term, it evens out, and then the cost of fund will also get reduced for the banks. And with the liquidity measures, like you could see that even yesterday, Reserve Bank of India announced certain liquidity measures, like they are doing dollar rupee swaps, they are doing OMA operations, and that is improving the liquidity in the banking system. And for the banking system to grow, deposits is the lifeblood for any bank. And if the credit growth in the system has to happen, then the flow of credit can only happen if my deposits are available. I believe that over a period of next 6 to 8 months, we will see some easing of liquidity in the banking system, and that will help the banks to show good credit growth.
Understood.
Hello everyone, greetings from Simply Finance Forum. My name is Parth Gupta and I will be continuing the second part of this interview with Mr. Satish Gundewar sir. So next question for you is, what are the most significant financial risks that banks and financial institutions must prepare for today?
So every bank or the entire banking sector goes through different cycles. What we see today, and that is visible from last 1 or 2 quarters, is that we are seeing a credit cycle, especially in unsecured loans as well as MFI loans. And people who are having those portfolios have seen elevated slippages, elevated NPAs in those sectors. So we should be watchful about these credit cycles coming in. Though we haven't seen any kind of a credit cycle yet in the secured portfolio, but one should be watchful about that. The kind of growth that we have seen in the personal loans and unsecured loans has been very high in the banking sector, and probably now we are into the cycle. The more important risk that the entire sector faces today is cyber security risk is the very important risk which every bank should be prepared. And of course, there are guidelines, there are things which every bank does, but one should be very careful of if there are any external attacks, cyber attacks on your network. It can have a significant impact on the bank, it can have a significant impact on the customer service. So one should be very watchful about that and keep strengthening our internal systems so that we protect our systems from any such cyber attacks.
Okay. So next question would be, like balancing a demanding career in finance with personal well-being can be challenging. So how do you prioritize fitness and what role does it play in your daily routine?
So finance careers are, I would say that there is a very fine balance between work and life, especially in finance careers. Almost the entire year goes in meeting some or other deadlines, and it is very challenging for the entire team. But at the same time, I believe that if you are to really excel in your career and to perform at your optimum, then your health has to be good. And for you to remain fit and your health has to be supporting what you want to aspire and want to do in your careers. If you ignore the health in early part of your career, then probably it might become difficult when you assume higher roles where the stress levels are higher, the demands are very high. Personally, I believe in yoga. I have been doing yoga for multiple years, and that is my fitness routine. So every day, 1 hour is absolutely fixed for yoga, meditation, pranayams that I believe in. I probably that has helped me to keep myself fit for a very long period of time. And even today, I participate in marathons. I go for treks. So that is, I would say, that is an advice to the young professional that be focused in terms of what you eat. That is the first important thing. 70% of health is what you eat, and 30% of your health is in terms of any kind of physical activity, be it any gym or yoga. But it is not one off that you do once and then forget about it. What is important is a habit, which something you have to do whether you like it or not, consistently for a long period.
Okay, sir. So next question would be, what has been the most valuable financial lesson you have learned in your career?
So there is nothing that is one single kind of a lesson that one learns in his career. And as I said in the earlier part, that I'm a learner even today. So I keep learning every day from my team. If there is any new area which comes to my notice, I try to get into that area even if I do not understand that area. And as a finance professional, I believe that one has to be conservative. One has to be taking appropriate steps which are required to ensure that the financial integrity is maintained very well. One should not be very aggressive. Second is in terms of the transparency, that you should be absolutely transparent, whether it's internal stakeholders or external stakeholders, and keep the health of the balance sheet absolutely perfect. That is what I believe that you should always aspire to.
Okay, sir. So, are there any books, mentors, or experiences that have significantly influenced your approach to finance and leadership?
So the today the landscape is evolving very fast. The regulatory changes are happening very fast. Whatever you have learned, say 5 years back, becomes not much valuable today. So one has to keep updating himself with what changes are happening. Especially in the banking sector, there are multiple regulators in the banking sector, the primary being Reserve Bank of India. Keep updated yourself with whatever changes are happening. Follow the requirements, instructions, directives from Reserve Bank of India to the absolute 100% compliance should be there. Take guidance from the regulator whenever required. But from a career perspective, what one can learn from observing people and listening to people has multiple humongous benefits compared to what you can learn by reading books. Whatever you learned, read the books, acquired your education qualification, makes you eligible only to enter an organization that is on the first day. After the first day, all that is done and dusted. Then how you grow in an organization or you make a career is in terms of how you execute things. And if you have to enable yourself to execute things better, then learning on the job, understanding from people, listening, participating in discussions, and if you do not understand, at least listen and understand. So observation is the biggest learning, I would say, that you observe things what is happening, absorb that thing, and try to imbibe that in yourself. I would say that is the biggest learning.
Okay, sir. So, next question would be, if you had to give one piece of financial advice to finance students and professionals alike, what would it be?
So to finance student, I would just give an advice that don't focus on short term. Today, as part of my job, I interview many candidates because I manage a team. And what I've seen is that most of the professionals today are thinking very short term. They think that, okay, if I get into a job, what is the pay that I'm getting? That is the first focus area of anybody. After that, when they change jobs, again, they feel that, okay, if I keep changing jobs every 2-3 years, this is going to be my pay. And the definition of growth is that what is the increase in the pay. The one advice which I would want to give to young professionals is that think long term and don't think short term. The way I have shaped my career is in terms of I have always changed jobs, or even there is no requirement to change jobs if the company is providing you a holistic experience about multiple things, giving you an opportunity to learn, then absolutely there is no need to change jobs. If there is an opportunity where you feel that your canvas is going to expand multiple times, go there. Secondly, be focused. Don't get into multiple things that I want to enter one area, then second area. Today's world is world of specialization. It is not a world of jack of all and master of none. We have to specialize in a particular area. Think long term that what I want to become after 15 or 20 years, what skills are required for me to become that person, and try and make your career moves which is taking you one step in that direction. Just don't go haywire saying that, okay, this company is giving me better pay and I will go there. Focus what you want to do after 15, 20 years. Jot down what are the skills that are required to become that and take every step in that direction. That is what I would advise.
Okay, sir. So, with this, we will conclude our interview. Thank you so much for taking time out of your busy schedule. We know that, and your learnings would be definitely quite impactful for the students and for the audience that will be watching your video. The learnings which you share, that you always challenge yourself, that's something will strike with me, because it actually improves you day by day. Even though new students and new competition is coming, you're always on the top of a competition. The way you share that you always make the learnings by watching books, and on the day one, it is everything is done and dusted. You have to improve yourself. So thank you so much for your insights. It has been really a learningful journey with you for this 30 minutes. So on behalf of the entire finance forum, I would like to give you a token of appreciation for taking time out of your busy schedule.
Thank you.
Yeah. So,